Update for the uranium complex. We were looking for a downside setup to take us down into our retracement box. And well, we haven't quite invalidated all the way through, but there's no clear resolution at the moment. We've been in a bit of a rally the past few days, and it has the look of an impulsive rally. So this is of course covering the 4 U's, UUUU, which is Energy Fuels Incorporated. And I also cover the 2 uranium ETFs, URNM, Northshore Global Uranium, and Global X Uranium ETF, which is URA. On our short-term picture, this is the 4 U's. That's what I'll be calling it for short. And we have what could easily be identified as a 5-wave impulse. You got a 1, 2, 3, 4, 5. It fits all of our Fibonacci proportions almost perfectly. So this is convincingly 5 up, and we have 3 waves down. I think I went over this in the last update. You can see that with this ABC in blue. And we may already have what we call a nested setup here. So it could be a 1, 2 and a 1, 2. We would be in the middle of a second wave consolidation at the moment. So if that is the case, that's a very bullish sign, because the next target up from here would probably be around 1285. So that's a good ways up from where we are. The picture is similar in the 2 ETFs as well, in which you could easily count these as 5 waves up. At least in URNM, it looks like a leading diagonal 5-wave up, as well as with URA, which looks similar. Now, there is reason to be cautious, however, because when you look at the 4 U's, this can easily be interpreted a number of other ways. When we look at that first wave, it doesn't look like a standard impulsive 5-wave setup. As a matter of fact, this would actually easily identify as 3 waves up in ABC. While it's not as apparent here, it's much more readily apparent in URNM. Hence, I put this notation to kind of demonstrate what we're talking about here. So our primary expectation is that we have 5 up and 3 down. So we have a 1, 2 and a 1, 2. However, there's the alternate in red, which says that this is an A wave, B wave pullback, and a C wave up. There is a big kink here, so that does kind of throw a wrench into this whole thing. You wouldn't expect a kink like that in a C wave, which would typically be an impulse. So it's a little less convincing here. You could also argue that maybe it's an A, B, and then a 1, 2, 3, 4, 5, or maybe a 1, 2, 3, 4, 5. A lot of ways to interpret this. So it's not the most surefire thing. This looks a little bit more credible. Maybe it's an A, B, and then you have a 5-wave impulse to finish with a C wave. So it's ambiguous at best, nothing certain. So that makes me want to shift over to a big picture, because that might be able to shed some more light on what we're looking at. So we had a downside setup. That's what I was highlighting earlier, that there was a chance potentially to short. And I'm going to take the stop out of the way because that is irrelevant to the current trade. Actually, delete that altogether. So big picture, we had our big peak in November, early November. I did make a video warning everyone to get out of their long trades, especially leverage ones, because you're in for some downside. And downside we got. We actually bottomed all the way down at about 544 or so. That was at the end of January. We've had quite a furious counter rally since. There's some alignment with the equities and the crypto space, but it's following its own pattern, marching to its own drumbeat. So we have what is best identified as 3 waves up. Honestly, it's A, B, C. You got a 3-wave pattern up for the A wave, 3-wave down, a pattern down for the B wave, and an impulsive pattern for the C wave. So at least until the last update, it looked like we had a very clean setup to the downside. However, we're expecting an impulsive finishing, or at least a diagonal, to complete this downside. And you can see after we had that high on March 10th, we actually had a higher high on, was that March 21st? So we actually broke the downside setup, at least the immediate downside setup. So it could be a higher high this could be a 5th wave of the C wave, could be something else. At the same time, in the 2 ETFs, we did not break that setup. So we have the same setup here, in A, B, C, with our top coming on March 10th. And then we had a sharp pullback and a bounce, and this bounce has not gone as high as the top was. So this could easily still be a 1, 2 to the downside. So it might be looking like what we're expecting in the 4 U's. So if we draw it like this, maybe a 1 very deep second wave, and because of the depth of the second wave, it could be something that looks like this, ending diagonal to finish off the correction, something like that. And the story is the same in URA, which is the Global X Uranium ETF. I actually have this drawn here for the same way, same pattern in which we did not. Actually, in this one, we also invalidated the immediate downside setup. So out of the 3 assets we're looking at, it is only URA or URNM that still has that immediate downside setup. So does that mean we're out of the woods? Not necessarily. This is a bit of an ambiguous setup. So as I mentioned, when we zoom back up on our 4 U's stock, we look at this thing. This, again, my primary expectation is that this is 5 up. We have 3 down, and this is a nested 1, 2. If that is the case, like I mentioned, we should see this downside complete relatively soon. We don't want to go back anywhere near 793 because that would invalidate this thing. If that happens and we start rallying through, once we pass 1094, that is what we call a pivot. We need to see a strong continuation through 1167 all the way to 1285 plus. Once that happens, that'll be a pretty convincing sign that we're done. We don't want to come back below 1094, and we would very likely be on our way to 1476. In the big picture, it would be, well, you can see how we have a box overhead. That would tell us that we're well on our way to rallying up. What does this mean for the structure that we have seen so far? There's a chance that this, again, would be the 1-2. So our alternate pattern would be that this is actually, again, I'm going to call this a blue Roman numeral lowercase 1. So that would be your 1 wave here, where we have the marking for the second wave, or for our B wave, and then you have a second wave here. And of course, the recursion tells us that, well, we have another 1-2 here. So I'm actually going to get this out of the way because we broke it. So this is what we're looking at. This could be a 1-2. And if this is a 1-2, here's what our projections look like to the upside. So get my fib tool out, put that on there. Assume we have a 1-2 in place already. But look at that. We actually have some confluences. Assuming that is actually a 1-2. Again, our third wave would absolutely target somewhere within this box. I'm actually going to mark that to make it a little bit more clear, in which you have that set up. So somewhere towards the top of this box, maybe even above this box, $19 to $22. This does count differently because this is the logarithmic chart. Expect some kind of a fourth of consolidation. So no lower than 1282 bottom of this box. And our eventual top would be somewhere between $24 and $28. And this is where things get interesting. Is this the true fifth wave top? So maybe this didn't complete, or is this just the first wave of a much larger rally? That is yet to be seen. Right now, I'm going to assume that it is actually the top of the top of a smaller degree first wave, which means we have a lot more upside ahead. I'm actually not even going to label it because my nomenclature would be all out of whack. I'd have to go revise that. So that will be done in a future update. So in summary, we have our completed impulse pattern that finished in November. We've had a relatively shallow second wave, so shallow, in fact, that we didn't get anywhere near our ideal retracement point. Did we even fall 23.6%? Yeah, we did. Actually, we didn't even hit that. So it's an extremely shallow pullback. And typically, that's not the most confident sign. You usually want to, again, stretch that rubber band back before you're ready to launch into orbit. But the market does what it wants, and you can't fight that. You can't fight the sentiment. There are a couple other things to note on here, that the divergences don't exactly signal a confident bottoming here. So you'll see that we had that top in November, and we had a pullback that bottomed in January, end of January, and the MACD stretched all the way down. We didn't have a second bottom. We didn't have any divergence. So there's no clear sign that this bottom actually happened. If you keep up with me in cryptos and my equities videos, things like that, you'll see that we have very clear divergences in pretty much every single crypto before a big turnaround in the recent weeks. We don't see that as much in the uranium complex. Here, you actually do see that. This is, again, URA URNM, Northshore Global Uranium ETF, uranium mining ETF. So when we look at this A, B, and C, there's a divergence. This was our A wave here. You can see how it stretched a little bit further down the MACD, and we didn't stretch as far down in the second part of that correction. So this is a bit more convincingly complete. As a matter of fact, we have gotten, I actually had to simulate this thing because it's hard to tell where the origin point of this ETF was because it hasn't been around that long. So we actually did get more than 23.6% retrace. Still a bit shallow, but better than what the 4U's got. And finally, we have our global X Uranium ETF. This has a bit more history, so you have a more complete picture. Third wave, fifth wave top, everything hit the standard proportions. And let's see, we fell about, yeah, we came pretty close to 30.2%. So if you go by the short-term fundamentals, the short-term picture, the 4U's looks the best. But if you look at this big picture view, the two ETFs actually look a bit better because they have more convincing pullbacks to the downside. Where are our targets for these two ETFs? When we look at this, again, we can build a fib extension for this as well. I'm going to zoom up on this in just a second. So assuming we have a 1-2 in place, expect 123 to 134 for your third wave, and our ultimate top would be somewhere between 142 and 156. I know it doesn't seem that significant, the distance, physical distance you're looking at here, but remember, this is a logarithmic chart. So these are colossal targets overhead. URA, the story will be much the same. There's a lot of clutter here because I tried using Fibonacci time sequences, and well, it didn't work very well. I'm actually going to delete those, get them out of the way, declutter our space. So again, if we assume we have a 1-2 in place, I actually already have that built out here. I did this just the other day. Make sure it retraced right. It did. So we're looking at somewhere between $45 to $51 for a third wave, and our ultimate top would fall somewhere between $55 and $62. So that is a lot of upside for URA. Let's do a quick calculation as to where that'll go. Third wave could go as high as 73% up from where we are to almost double. And then we could go double to 133% up from where we are. So a lot of potential. That's pretty good for a non-leveraged play. If you're playing options, things are even more exciting. This could make for some big returns. If you are going leverage, I'm definitely going to have some setups in the coming days and weeks on how to pull that. I will play call options, most likely if the setup holds together with clear stop out points. And the best thing is to wait for a good 1-2 setup. If we have a 1-2-1-2 nested setup, as you see here, that's the best place to play long, because you get a straight shot, a lot of validation points, and the third waves move quicker than anything else, as evidenced by what we saw here. The fastest moving part of this was the third wave. You saw another vertical stretch here, the third of the fifth wave. So even the third of the fifth wave can be very fast. And the story continues here as well. URNM and the 4U, same thing. We moved extremely fast in what I'm calling the third wave. So again, smaller version of that could make for some pretty good returns. If I have to give a timing projection based on these diagonals we have drawn here, the trend lines, well, I'm actually going to I presume that it's going to align closely with what we're seeing in equities. So maybe in the summer, we see some kind of a third wave peak, something like that. I have a similar projection for a lot of cryptos, possibly as early as August, maybe as late as October. We might see some action for a third wave. Fifth waves tend to take longer, as do fourth waves. So I think we would push that out a bit further. Not sure where we're going to go. So I'm going to have plenty more updates. Don't forget to subscribe so that you don't miss them. And if you are looking for these charts, I will have them posted in the links below in the description. Don't forget to check those out. Please give me a like if you've enjoyed my video. Until next time, thank you for watching and happy trading.